I know.
Other from our.
When you're ready to record,
I guess.
you want to go faster, Doug?
We are recording here.
Seriously, great. So welcome everybody to the Community Development and Renewal Agency work session for today, Tuesday, February 21st, 2023. So as mayor of Cottonwood Heights, I serve as the chair for the Community Development and Renewal Agency with the members of the city council as members of the board. So our first matter for discussion is listed as the Hillside Plaza discussion. But I'm going to have our city manager, Tim Tingy, along with our community and economic development director, Mike Johnson, give us some background, just where we are.
Yeah, so since you approved the amendment to the purchase and sale agreement, we have been working diligently on a number of different issues. One of those issues, you recall, was the CCRs that needed to be revised and addressed. Shane Topham has done a lot of work on that. And Shane, if you wouldn't mind just giving an update on where we're at with that.
Yes, we've come to terms with the seller, at least on an amendment to those CCNRs that I believe is acceptable. It addresses the main concerns that I at least had and that we've discussed. So we've gotten word from seller's counsel that seller has approved it, but there's still because those 2006 CCNRs also encumber what we call the Walgreens parcel that is owned by a separate owner and it's financed by a lender. The CCNRs have to be approved by that other owner, and which is a related company to our seller, as well as by its lender. And so I've been checking with seller's lawyer about where they are on that. I checked back again today. He said still waiting for, he said the lender's approval. I don't know if that means both the other owner's approval and the other owner's lender's approval, or just the lender's approval. So that's where we are on that, but the ball has been in their court for several weeks now.
Then on second item, that was one you have.
Well, I was just going to ask a question to Shane on that. So I think they mentioned that the last time they made a change, it took the lender 8 months. If the lender drags their feet, is there substantial, in your mind, how would we proceed if the lender doesn't perform in a diligent time?
Well, to me, I think we need more time. That's the one that prohibits any residential use, among other things. And to me, the changes are fairly easy. I think that anybody ought to be able to respond quicker than 8 months. And was that the lender that took that long, or was that Walgreens?
If I remember right, it was the lender that took so long. Yeah, remember.
In any event, I'll continue checking back with the lawyer to see what they can do to push it.
Great. Mike, anything?
A lot of the details of the other part of this that we've discussed involve an existing tenant, probably best discussed in a closed session that's not noticed tonight, but we have worked on the other side of this as well and met with one of the tenants that we were allowed to meet with, and you were in that meeting. We had a discussion and have at least some direction on what they would consider and what they won't.
Yeah.
I think that's probably as detailed as we can get into it here. But.
Yeah.
And what our hope is at our next meeting, where we meet as a city council and then a CDRA, which will be in approximately a week, we will have additional information and details to share with you, potentially in a closed meeting, because it may, if the CDRA board wants to go into a closed meeting, because it does pertain to real estate transactions. So we'll have even more detail than what we would have tonight on that, but we have been making progress, as Mike has said, and having negotiations and conversations with these tenants, and we'll have a report for you next week.
When's our deadline coming up?
End of March is when the deadline is, at least at this point.
So these are two pretty critical factors. And so we hope to know more in a week from now.
Yeah,
Yeah.
but the bottom line is we've been working since day one. After that agreement was approved, we've been working diligently and making progress. It's so we can give you more of that detail that we're working each week on this significantly. So
Well,
that's,
thank you. Appreciate that update. So item 3, we're excited to have Matt Dugdale here. And so this is in reference to the bond discussion. And are we gonna have Matt present, or are we just gonna give some background still?
we can, Scott, we'll have Scott intro and
Okay,
then Matt
Perfect.
join in.
Perfect.
So really quick, as it relates to the bond, we have kind of two components related to the purchase of this property. One of those components is a grant that we received from the state of Utah for $1 million to go towards the purchase price of that. It cannot be used for debt service, has to be used within 6 months of, I think, of receipt of the funds, and so on and so forth. So there's a relatively narrow window and therefore a narrow availability of costs that we can utilize those funds for. But it has to be hard costs, not financing costs for that building. And then we would need to bond for the remaining portion of that, including any, I'll call them closing costs, but also title costs that might go into the purchase of that. We anticipate that to be about around $13.3 million of bonding. And you know, we'll see what the rates do and so on and so forth on that. But that would be maybe in the realm of a $1.1 to $1.2 million annual payment, depending on what the rates are doing at the time. And Doug might be able to, sorry, I always call you Doug, and I don't know why, but anyhow, he's Doug. But anyhow, Matt will be able to clarify a little bit, at least where the market is today on some of that. But the net anticipated purchase price, including closing costs, would be about $14.3 million. And you all allowed us and authorized us to go up to $14.9 million if need be for bonding, and we will not need to go to that extent. So that's kind of where I'm at on it. Are there any questions on that part of that?
We're looking at 13.3, you said.
For bonding, yeah.
Okay.
So, and it might move just a
I
teeny
think so.
bit around that, but pretty close.
The $1 million has to be used to reduce purchase price. It can't be used for debt service. So we're lowering the purchase price with that $1 million
Oh.
grant.
Is that contingent then on the property ultimately being used for the residential use that's contemplated by the grant, or how does that work?
The grant does require residential use.
Eventually,
How-
not
how-
immediate.
80 units, 8 units per acre, right?
How,
We didn't put, it's not even that specific,
Oh.
but it did say it would include a residential component, some of which is affordable.
So even if it takes us years to actually build these residential, we're still eligible to keep that $1 million.
Yeah, I think we would need to show some sort of plan or something that we're developing under that shows that. So
Will
that
we be able to
the-
fulfill that if we haven't really even established what acreage is going to be used for what, or?
Once the funds are, once the contract is signed for the grant, we have 6 months to encumber the funds. And then you have until 2024 or 2025, maybe 2026, to show substantial progress towards the use of the funds. So I think we would just need to get to work on a site plan, which we have a grant application out for and feel good about getting, that we would get to work on right away.
You all are aware of the grant application, right? We've discussed that.
Well, there is currently not a minimum amount of housing. I know that some needs to be affordable. It seems like there'd be some sort of a,
I would need to go back and check, and I can provide an update.
yeah, if you do.
But I know we didn't put a hard number of units in there. It was just, hey, it'll be a mixed use project that contains a residential component.
Well, if there's a number like that, it'd be interesting.
Sure, I'm happy to look it up.
I don't think that we would satisfy the spirit of the grant with one.
No, I think you're right.
Well, the mayor mentioned something about 8 or whatever, but some of the developers previous were talking about 35, I think, per acre. So
it is part of what we were trying to do with this property is what we're looking at.
And does any percentage of that have to be affordable housing?
Yeah.
What percentage? 15%?
15.
Okay.
Then we'll define what affordable is.
That would be at 80% AMI. That's
Right.
the federal accepted definition.
The general rules.
I mean, jokingly about how unaffordable things are now.
I mean, the reality is the 80% AMI in Cottonwood Heights is certainly a big event.
Significant, yeah.
I should say 80% or lower. It doesn't have to be 80. It can't be above 80 to be considered affordable.
Okay, questions? Yeah, or we're gonna turn this time to Matt. All right.
Sure. I did bring some reading material. If anyone has trouble falling asleep tonight, this should prove helpful, but no, thank you for having me tonight, Mayor and Council. Really, I'll just be very brief. Tonight represents really your second statutory step in the bonding process where you host a public hearing tonight and give the public a chance to speak to this. No formal action takes place. But we're well underway in the bonding process. This week we'll be reaching out to the bank to get an interest rate and compare that with the bigger options. And I would say that the interest rate market continues to be volatile. The Fed is concerned about inflation. They made that very clear in their last meeting, and they'll continue to combat that. So I believe until we lock in rates will continue to go up and down. The packet in front of you has probably more information that that we would need to cover tonight, but suffice it to say, I'm pleased with where interest rates have come since we topped out last fall. They did go up last week again because of the Fed's comments, and we'll just keep tabs on it as we
So is it 30 days to lock in? Is that where we need to be?
Yes, so
Issuance.
that's correct. Yes, the banks are, because the market is so volatile, the banks are hesitant to hold a rate for longer than 30 days. In some cases, they'll go a little bit beyond that, but so the timing is we kind of work backwards from when we anticipate closing to lock in that rate because we want them to hold it.
Can you just MMD? Municipal somewhere is one of the M's, I'm guessing, but
Yes, yes. So MMD is what we use in the tax exempt
what is it? What's
market.
the MMD?
It stands for municipal market data.
Okay,
So
got it.
picture a benchmark mutual fund of AAA rated general obligation bonds. That's kind of the gold standard, lowest rates you can get. And they chart those rates on a daily basis, which is kind of the yield curve depictions you see there. Especially on page 3, the yield curve on page 3, for any of you that kind of follow short-term yield versus long-term yields, you get a sense of what the yield curve looks like right now in that lower left-hand corner, where the yield curve is inverted. So short-term rates are higher than long-term rates, which is typically a representation that investors there's a lot of unknowns about where the economy is headed and where the market is headed. So again, we'll just continue to keep tabs on that, reach out to the bank and get a rate back and have that in place in time to close. Other interesting aspects, if you're interested in some of this reading, is page 5 contains some probabilities of the Fed in its next meeting in March, increasing again short-term rates. We would be locked in prior to that they are projecting a 25 basis point increase.
What's the date of that meeting?
That is March 17th.
Okay.
Mayor, unless I'm March 17th, I believe that's the date. So we would be locked in before that, and again, probabilities are pretty high that they will continue to increase to combat the inflation. Interesting historical graph on page 6 depicts kind of that market volatility. Again, Scott, that AAA MMD spot rate, the 30-year rate mapped on a weekly basis, back to 2016. You can kind of see page 6 outlines some of those major market things that we've seen and where rates have come and gone. Page 7 and 8 just, kind of speak to, again, trends, credit spreads, and other, market data. But I believe the city will fare well. Your financials are strong. You run a really great city, and relative to your counterparts, it should do very well.
So are we getting multiple quotes, or just are we getting one, or what are we doing?
Yeah, the plan initially is to reach out to one.
Okay.
And compare that with the market. If it looks positive, then certainly we could lock in with that, and if not, we can always pivot and explore.
And we're in some type of range, mid to high 3s to low 4s, right? Somewhere.
That's on the tax exempt rates.
Okay.
Taxable rates are quite a bit higher. Last we ran it closer to the 5.5, and
Okay.
so there's definitely a differential between.
Because of the unknown in the development and everything with it, we'll probably initially fund it taxable. And then at some point in time in the future, either if we then know what we're going to develop and retain and sell and those kinds of things. And if rates go down, then refinance at that point in time. To whatever it is that we intend to do. But again, we're not necessarily planning on holding, at least not the whole amount of property for a long period of time.
Yeah.
And I just want to commend you for getting that grant of $1 million towards the purchase price over time. If the city were to keep these bonds outstanding for 20 years, it's probably close to another $1 million that you're saving in interest.
Yeah.
Congratulations.
So we talked about possibly, there's a couple parcels that are not being used at all, about doing a partial issuance of tax exempt. Can we not do that, or do we have to do the whole thing taxable? Did we find that out?
Well, well, and Scott can address this. We want to make very clear and be sure that we know exactly what that is, because if not, they're callable,
Yeah.
correct, at that point.
One of the problems if we go tax exempt is that if we are holding, like say we do 50-50, we think half of the property could be tax exempt, but then if we sell more of that property, immediately that becomes due upon the sale of that property, if it goes to a developer. So if we overestimate our hand on that, then, say, it's not, 5 acres of the 10 acres, it's only 2 acres of the 10 that we intend to keep, yet we finance half of it on a tax exempt bond. Immediately, half of that bond becomes due and payable at that point in time. And so we would have to do it, even if we sold the property at a discount to a developer, we would have to come up with that difference of that. And that could be, millions of dollars, depending on how much and, and so on and so forth and everything that we do. So to guard against that, I think going on a taxable route for the property, holding it for that short period of time until our development intentions become very, very clear of what we're going to do, then we can trim and refinance what, at least the portion that we intend to keep for a long period of time into a tax exempt bond. At that point in time, if the rates were, similar to now, that would at least reduce it at least about a percentage point if things hold true. And then the rest of it, at whatever time that we sell it, we could either choose to hold on to some financing of that for a period of time, or we could retire the funding, depending on how much we sell and what we sell.
So we'd have to do a complete reissuance though, right? If once we have a better idea of what we're doing of the bonds.
Under that scenario, yes.
Okay.
Yes.
So Scott, just to clarify, is the call on the parcel, say if you're talking 50-50 just for simplicity. But if you sold a portion, say 15% or 20%, it would just be called on the 15% portion of it, or
It's
not?
only callable if we go tax exempt. On a taxable
Right.
bond, you can actually, hold it out and so on and so forth. It would be our intention to call on those.
So we're going all taxable to be safe,
Yeah, unless you want to do something different, and stuff.
but we don't know where we're at, so we'd have to weigh that.
Yeah,
It's
The spread, if the spread is 2 points between taxable and tax exempt, then you're looking at an additional $20,000 in interest for the year. So about $10,000 on $1 million.
That was good math. Because I was
I was
gonna
like,
ask that question.
it's like, are we, I mean, how much risk do you want to take on? I mean, that's the risk takes more, but yeah, $1 million at 1% is $10,000. So
If it's a short period of time that we're holding the
Right.
property before we go to a developer, it's really not a huge amount of money. I mean, it's not peanuts, but it's not a huge amount of money. And then we
Worth
can
the risk.
adapt that and do what we need to do rather than that call risk worries me.
Yeah.
Plus, it complicates a lot of things too, for that percentage of money that you may or may not,
Yes, as a municipality, you do benefit from tax exemption. But there are some definite complications with tax exemption, with the unknowns we've discussed.
Well, great. Any other thoughts, questions, comments?
Thank you.
Thanks, Matt, for coming.
Thank you.
Mayor, there's no, in the grant application, no specified unit count. It is 15% minimum affordable housing units, though.
Fascinating. Good. It's good to know. Okay, well, thank you. So let me just read to you real quick how we'll do the minutes. The minutes of this meeting will be approved through the following process. The agency's secretary promptly will circulate a draft copy of the minutes to the board members, us, who will have 3 business days to provide any proposed corrections to the secretary. The secretary will then circulate a revised draft of the minutes to the board members. And the same review process will continue until such time as no corrections to the draft minutes are received within the 3 business days review period. Whereupon that draft of the minutes will be deemed approved and will become the final minutes of the meeting. That was clear as day, right?
Just a minute.
Just a minute. So at this point, I'll entertain a motion to adjourn our CDRA meeting and begin our business meeting scheduled to begin at 7 p.m.
I'll make that motion to end our CDRA meeting.
Okay, all in favor?